This is our Forex blog for October 14th, 2013. And basically, in a nutshell, these are our currency indexes, which is a visual chart of each individual currency. Just like we've done for the last 6 or 7 years with currency meters, statistically measuring what each currency is doing. You can certainly add those to the bottom of each currency index to give you even more intuitive feel for how strong or weak it is. But it lets you see how strong or weak it is. In fact, hourly moving average is in gray. Below that, the dollar tends to go down. You can see the yen is also underneath there. The pound is for most of the earlier part of the day. So is the euro. And so the dollar's weak, the euro's weak. You don't want to be buying or selling the dollar. You don't want to be buying the euro dollar or selling the euro dollar because they're both weak. You're better off finding a currency that's above its hourly moving average and trending up, such as the Australian, or the strongest one today is the New Zealand. So this lets you immediately know you don't want to trade the euro dollar at all, long or short. Now obviously our trading signals work pretty well, regardless of what the currency index is doing, but you're better off selling the euro Australian, and even more so selling the euro New Zealand, because the euro New Zealand is so strong. So as you can see from this chart, for most of the early part of the day, you're looking for buys. You have a nice little sideways rectangle pattern. This one really didn't go up that much because the Australian was also going sideways at the time. But I would bet if you look at the euro New Zealand, probably made a 30 to 50 pip. Actually, I'm sorry, let's go back to that. We're actually looking to sell the euro Australian because the euro's weak and the Australian's above its hourly. So this is kind of a choppy move up. You can see the previous swing high got real close to there. You might have gotten short right here. Went down a little bit, you move your stop at break even, you have a small loss here, you got short again here, and you can see this trade fell about 20-25 pips. And after that point, the euro wasn't as weak anymore. Let's take a look at the euro New Zealand. Again, we're looking to sell it. The New Zealand's the strongest of all 8 pairs, and you can see it fell 50 pips there. Get a little bit of a pullback. You had a chance to make 15 pips on this, but more than likely you would have had a break even or made 3 to 5 pips. Go short again here with your stop above the high. You might have got stopped out and had to get back in. But again, it fell from 62.50 all the way down to 90. 60 pip drop. And this is what typically happens. You don't always make money on every trade. But the point is, if you're trading one of the most statistically strong currencies on the way up versus one of the weaker ones. Now, the euro wasn't the weakest. Obviously, the dollar was near its previous day's low, then broke underneath that. That's much more weak than the euro, who hasn't broken underneath its low. Let's go back and look at the Australian dollar and New Zealand dollar. You want to be buying both of these, basically on pullbacks or sideways rectangle patterns. This is kind of a pullback right here, went up, a little bit of a pullback, went up, a little bit of a pullback, went up, kind of went sideways. You might have got out of that trade, and then it busted through the high up there and went up 20 pips. And as we bring up the New Zealand dollar, it's going to go up a lot more because you knew that New Zealand was much stronger. And again, once the currency kind of inches its way up, you really can't be jumping on board that, because a lot of times they pull back. You might, when it has a little flag pattern, buy this. You also can buy this little pullback here, because notice it didn't go underneath that little low during that little flag pattern. And you can get long right here with your stop a few pips underneath the swing. And the key to trading is, bigger wins than losses. You're never going to get every pip, but even if you got 2/3 of that move, it's 1.5, 2 times, actually 2 to 2.5 times bigger than what your risk is, and that's the key to trading. Small losses, big wins. Now you also can use our FX trade signals. Here's our example of this today. Some of these trades I put in after the market was open, and some of these trades that showed up on historically didn't show up live. So this is a composite of what the pound dollar would have looked like if run overnight with my new trades. The new trades I put in today were this right here, buying the 50% pullback, and this one, and this one. Basically, in a nutshell, we have a swing high. The next swing high goes over 15 pips over that. The combined distance of this swing is over 45 pips. I'm looking to buy the 50% pullback. And there's certain bar patterns that have to meet too, but you can see that it had a decent enough pullback here. If it's just kind of going sideways right there, I don't buy them. It has to be coming down and then reverse right at that level, and your stop's underneath the low, and you can see it's astronomically big 50 pip win. Or even if you got out right here, you made over 20 pips. The fib target, because this, it made a higher high, higher low. You can see this is a higher low than before. Another higher low. And it's such a big move, two wave up, it's likely to reverse at the 1.382. So if it does, we get short right there. If it goes above that, we don't get short. If it goes to the 1.618, I have different rules up there. This wasn't strong enough today to get to that level, but we would have been selling that area too. Sometimes you have a loss and then it goes to the 1.618 and then you get a nice 30 or 40 pip drop. But you can see the majority of our signals were pretty accurate today. The only one that wasn't, and this is a valid signal right here, this is where the hourly moving average is. It's one of our counter trend signals. Typically when the market's trending up and you get a 3 down, 1 up, 3 to 4 bar down and then up, it's a good place to buy. I classify as a counter trend signal because they don't always go back up, but when they do, they typically go up more than what your risk is by many multiples. The whole point of whatever trade you're entering on, in some trades, like if you are super tight with your stop, you would have lost on this. But if you see the market not able to get underneath that low, you can always pull the trigger again right here. And each of these bars is 5 pips, so it went up about 12 pips there. This is a 5 pips per bar range chart. So for people that are brand new, this is a wonderful way to trade. You have all of your charts up. Let's say the euro dollar, pound dollar, euro yen, pound yen at the minimum. Then you watch the currency index to know which currencies are strongest and weakest. And then focus on those. Like the yen was underneath its hourly moving average all day. So the Australian yen is going to go up, and especially the New Zealand yen is going to go up, as you can see, up, up, up. So let's put up a 5R chart, and we'll add our signals to this. Now, typically I spend all my time working on the euro dollar, pound dollar, euro yen, and pound yen. I have no idea what I'm about to look at, but I do know the euro or the New Zealand yen is very, very strong. So we're only looking to take buy signals. Any sell signals you might use to tighten your stops, but other than that, do nothing. It takes a while to come up with because it has to order a ton of data. There's probably equivalent of about 30 to 40 different indicators that are in this. Different studies are used for different patterns. There's about 125 plus patterns in here. Different one use different settings. Alright, so here is the patterns. And again, the New Zealand was super strong. The yen was weak, so we're focusing just on the buy. So you get into the trade right here on this close, your stop's underneath here. Unfortunately, that one didn't take off. And, once it moves up 1 bar, typically when I'm trading these manually, I'll move my stop in the middle of that bar. So I would have lost like 4 or 5 pips here. It really didn't significantly break that previous low, and it certainly wasn't underneath here. So what I manually do trading, these up-down patterns are very hard to create systems. They're very low odds. So I only take these trades when I'm manually trading. But you would, because there was a buy signal here, and because the New Zealand index was up and the yen was weak, really the yen was going sideways. So that's one of the reasons it didn't initially explode up until closer to after 12 o'clock, because that's when the yen fell like a rock. But regardless, you have a small loss here, you get back in again, small win, you get back in. This trade's kind of going sideways, and then it finally started to inch its way up, so you can move your stop underneath these lows. Goes up again, going, so you would have maybe made a pip or two on this one. Buy signal here worked. Now, anytime if I'm in a trade and you get a sell signal, basically all I'm doing is moving my stop up underneath here, and if it breaks there, I'll exit my long and sometimes go short with half my position size. Keep in mind the yen was weak and the New Zealand was strong, so I probably would have not done that. But from my experience, if you draw your fibs from the low to where that signal is, you generally can look for sells at the 1.382 level and higher. So I will basically kind of draw a trend line underneath there and go short right here with my stop above here. And you can see that would have generated a little bit of a profit. I typically don't like to buy shallow pullbacks like that, especially after it went up, decent pullback, went up again. So I'm going to be, instead of buying that pullback, looking to sell again here and waiting for a little bit deeper pullback. You get a buy signal here. The trend is up. A counter trend trade, you get out. Maybe you made 15 pips here, and you're in again with your stop underneath here. And this is just kind of the dead time of the day, so I'm going to be moving my stop to break even. There's no reason to risk even 5 or 6 measly pips if you're not likely to make 15, 20 pips. It's not worth it. So stop would be at break even, and we'll see what happens here. I'd check it at this time of the day, maybe every 30 minutes. Either I got stopped at a break even, or if it goes up a little bit more, I'm moving my stop up. But anyway, that's how you can trade, both discretionarily, and you can just take every trade. Because as long as you go short, your stop's above here, it goes one bar your way, move your stop to break even. This one might not have hit your stop here and came down again. You got a buy signal right here. It's not able to really go lower. You flip from your sell and you go long again. Or, there's a lot of different ways to trade this. But for the most part, even on currencies I've never even spent 1 minute working on these signals on. I've never brought up the New Zealand yen, seen what it looked like, and tried to fix some of the signals. This is all from my work on Eurodollar and Euro yen mainly, and recently a little bit more on the pound dollar. Today I spent most of my day working on the pound dollar, and which is one of the reasons why I spotted this new way of spotting multi-swing fib areas. In the past, I've had fibs only show up on one swing. So the low to the high, it buys the 50% pullback. That's not a big enough swing. So now I'm starting to look for multi-swing point highs and lows to find at least 45, 50 pip moves, and then it's looking to buy the pullback. So as you can see, much better. Pretty much, it only went 2 pips underneath here. Closed up, we're in, and you just rode that straight up. You're going to find on big trend days the fib pullback at the 50 and the 62% level is going to work really well. I'm not going to be putting in 382 fib pullbacks for quite a while, and only on moves of maybe 75, 80 pips up. So if it exploded up 75, 80 pips, then I might buy a 38% pullback. But a small 30 or 40 pip move up, I'm not buying a 38% pullback. It's too shallow. It's not deep enough. This is a pretty decent, deep pullback, and it's why it worked so well.